It wasn't because the business model stopped working. It was because of one single CEO decision. Decision so reckless that investors pulled the plug instantly. This is the story of how Adam Neumann destroyed WeWork. WeWork didn't start as a real estate company, it sold a vision. Serving hundreds of thousands of members and attracting some of the most powerful investors in the world. At its peak, WeWork was valued higher than Ford and Delta Airlines combined. It was a cultural phenomenon. And at the center of it all was Adam Neumann, charismatic, confident, and completely unchecked. He wasn't just a CEO. He was a prophet, promising to elevate the world's consciousness through communal workspaces. Investors weren't just buying into a company, they were buying into him. But behind the hype, the cracks were already visible. WeWork was losing billions of dollars every single year. Its business model was fundamentally risky. It leased long-term office space, locking into expensive contracts, and then rented that space out on a short-term basis. This mismatch. He controlled the company with supervoting shares. The stories that emerged were unbelievable. He personally bought buildings and then leased them back to WeWork, profiting directly from his own company. He even charged WeWork millions of dollars just for the rights to use the word "we" after he trademarked it under a separate entity. Company money was used for lavish parties and private jets, treating WeWork like his personal empire. Employees were reportedly told not to question him. Investors, mesmerized by the growth in Neumann's charisma, ignored all the red flags. Why? Because SoftBank, one of the world's largest venture capital funds, kept writing bigger and bigger checks, fueling the fire and validating the madness. In 2019, Adam Neumann made the decision that would destroy everything. He pushed WeWork toward an initial public offering, an IPO. This is the moment a private company opens itself up to the public market. And to do so, it must release a document called an S-1 filing. This document forces the company to open its books, revealing all its financial details, risks, and internal governance to the public. And what potential investors saw shocked Wall Street to its core. The IPO filing laid it all bare. It revealed massive, staggering losses with no clear path to profitability. It exposed Adam Neumann's extreme control and the countless conflicts of interest. The company was literally defined in the filing as a community company, not a real estate business, which baffled analysts who saw the billions in lease obligations. The illusion shattered overnight. WeWork's private valuation collapsed from a staggering $47 billion to less than $10 billion in a matter of weeks. The IPO was dead on arrival. The fallout was swift and brutal. Though he didn't leave empty-handed. He walked away with a golden parachute worth hundreds of millions of dollars, a reward for leading the company into a ditch. WeWork locations around the world were shut down. The dream was over. by a CEO's decision that should never have been allowed to happen. And the price tag for that one mistake? $47 billion. Thanks for watching. Next episode, another CEO decision that changed business history forever.